Welcome to the Investors United channel. Hope everyone's doing awesome. I know I am. Today we're going to be going over what market cap or market capitalization is. If you want, you can like and subscribe. If you don't, that's also cool. You do you, boo-boo. Alright, market capitalization tells us what a publicly traded company is worth. I'm going to tell you how we get this number. So let's start off in a way everyone can understand. Alright, let's say we have a nice freaking birthday cake, and this birthday cake represents a company like Facebook. When Facebook slices up this cake to serve, those are the individual shares that we can buy of Facebook. And let's say each slice is $5 or $5 a share. Now, Facebook isn't actually selling at $5 a share, so calm down, buddy. This is just an example. So out of that whole cake, let's say we have a total of 6 slices altogether. And since each slice is $5, the total amount comes to $30. Quick math, 5 times 6 equals 30.
Wow, you're so dominant.
So the whole cake, or Facebook, has a market cap of $30. That's what Facebook is worth in this scenario. If it doesn't make sense, rewatch it. If it still doesn't make sense, comment down below and I'll get you an answer. Now that I put it simply, let's see how we can apply it to an actual stock like Facebook. So as of right now, Facebook is currently selling at $251.36. Now there's our cake slices. Now you're probably wondering, how the heck can I find out the number of shares in Facebook? Don't worry, I'm about to show you right now. Okay, go to Google, type in Facebook's latest 10Q, alright? It's going to come up with our SEC filings. Now you want to have the most up-to-date SEC filings. So go to our quarterly earnings. Then we go to Form 10Q down at the bottom here. And then just open it up however you want to open it up. I'm going to open it up as a document here. It's downloading. And we're going to scroll down and we're going to look for this right here. Our class and number of shares outstanding. So Class A common stock and Class B common stock. The difference between the two is the amount of voting power that one receives along with the share. So Class A shares are owned by directors, and Class B, they're the ones that are sold to us, the general public. If you want me to do a video more in depth about the SEC filings, just let me know in the comments down below. Now that we found out how many slices of cake we have in this total cake, which are these numbers right here, now we need to multiply them by our current stock price, which is the $251.36. So we take $251.36, multiply that by our Class A and Class B common stock. So I'm just going to do this really quickly and speed through it so you don't have to sit here and watch me put in all these numbers. So this is the first number we get, multiplying it by the Class A number of shares outstanding. Now save this number, we're not done with it yet. Now we have to do the same thing with the Class B common stock. So I'm going to fast forward through it again. And this is what we get. So we take this number and we add it to the last number we just had. And this is the number we get. 715,946 blah 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 blah. So we come over here to double check ourselves. Right there, market cap, 715.9 billion. So now if for some reason you want to find out the market cap and you don't want to look at, like the overview where it shows everything, you can go through all that and double check the company's market cap. Okay, now that we covered that, it's time to talk about how this is going to help us. So us as investors are basically trying to determine the company size and value. Bigger companies with more value are usually more stable than smaller companies that are just starting out and don't have as much value in them yet. And that brings us to this chart right here. First, we have our mega cap range, which is more than 200 billion, and this can go into the trillions. We're not going to dive too much into that one today, but we're going to talk about the large cap range, 10 billion to 200 billion, and these are going to be our bigger companies that have been around for a while and they know how to work it, all right? This is going to be for people who maybe aren't as risky with their money and they want something stable. So when you invest in these large cap stocks, they usually pay out dividends. The downside is they pretty much peaked out on their period of growth as opposed to mid cap and below. Mid cap stocks range from 2 billion to 10 billion. And mid cap stocks have a nice level of maturity that adds some stability and also shows investors that it has some room to grow to a large cap stock. But depending on the company, this can also be hard because they have to compete with those large cap stocks. It's also important to look at the history of the mid cap stocks because they could have been large cap stocks that have been going downhill. So keep that in mind. Next, we have the small cap, which is 300 million to 2 billion. And then we have the micro cap, which is 50 million to 300 million range. Now, these are the risky stocks to invest into because these are the companies that are just starting out, so their potential is uncertain. On the upside, they have been known to produce higher average return than large cap stocks because of that room for growth. So, just to recap, if you want a more stable portfolio, start looking into large cap stocks for that steady return. Or if you want to be more risky, go into those small cap or micro cap stocks. Or you could even go the route most people do and throw money into a little bit of everything. If you can get anything out of this video, it's don't always look at the price of a stock and assume it's a valuable company, because it's possible for a stock to be priced at $50 a share and have a market cap of 400 million, and a totally different company be priced at $40 a share and have a market cap of 500 million, which would make this company more valuable. So keep that in mind. Thank you everyone for watching. I hope you were able to get at least something out of this. Investors United out.